90% of your trading edge isn't finding the perfect entry. It's having a predefined exit strategy before you even click buy. This is the system lifecycle. Most novices focus entirely on the entry. But sustainable alpha comes from the surrounding steps: filtering, sizing, and management. Without the full chain, a trade entry is just an unmanaged liability. Before considering an entry, we must pass the pre-trade filters. This phase answers: does the current market environment support my strategy? If the regime is wrong, the trade dies here. We evaluate 4 specific pillars. Direction: are we trending or ranging? Regime: is volatility expanding or contracting? Pricing: is implied volatility cheap to buy or expensive to sell? And liquidity: is the open interest high enough? Once filtered, we move to entry logic. This must be a binary rule, not a feeling. You should be able to write it as an if-then statement. If you cannot define your trigger mathematically, you do not have an entry. Here is a standard systematic entry structure. Notice that the trigger requires both a technical condition, like a breakout, and a volatility condition, like IV rank, to be true simultaneously. Step 3 is position sizing. We define risk based on portfolio heat, not contract price. We calculate the maximum capital at risk if the option goes to 0, ensuring no single loss exceeds our threshold. Now the trade is live. We enter the management phase. Most traders just watch P&L swing. Professionals monitor their 3 exits. You must know exactly where you get out for a profit, a loss, or simply due to time. These are the 3 mandatory exit definitions. The profit exit captures your edge. The technical exit protects you when the chart invalidates your thesis. The time exit prevents dead money and gamma risk. The time exit is unique to options. If the stock hasn't moved by your deadline, the trade has failed even if you haven't hit your stop loss. Theta decay will accelerate, so we exit to preserve capital. Compare holding through expiration versus exiting early. Holding introduces massive gamma risk, where small moves cause huge P&L swings. Systematic traders exit early to avoid this volatility. Finally, the post-trade review. We don't just track money, we audit execution. Did you follow the plan? A losing trade followed correctly is a good loss. A winning trade that broke rules is a bad win. Mastering this life cycle moves you from gambling to business management. But even good life cycles fail if the underlying system degrades. We'll cover system failure modes in the next video. Next, why trading systems fail and how to fix them.